So a very nice rally to finish off last week as we expected in our previous videos, which if you are new here, just subscribe below. It is free. We pumped all these out on Wednesday and Sunday of every week. But I do want to bring up some things for this week to kind of that are notable because there's a potential that we could have an end to this kind of mini rally that we are seeing right now. And one of the things I do want to bring up is the fact we have a head and shoulders on the hourly chart. So the hourly chart gives us a better sense on what can happen slightly in a slightly longer term sense than the 15-minute, which I like to look at, and also the daily, or at least it'd be the middle of the 15-minute and the daily. But you can see here we have a head and shoulders pattern. Left shoulder right here, we have the head and the right shoulder, and then we fell down below the key level of roughly like 406, 407. And once we fell below, we had a lot more to go down until we did have a base around a previous key support, which you can see here, very, very key support. That goes all the way back to kind of before we even gapped down big over here. It's been a key resistance 1, 2, and 3 times until we broke above, and then also acted as support afterwards. So obviously this is going to act as some form of a support when it retests in the future, which it did this week. So this is going to be a very, very key pivot, especially this month of September. If this breaks to the downside decisively, especially with the daily candle, there's going to be a lot more downside, and that will be our confirmation that we are most likely going to fall to the lower end or close to the lower end of this downward channel that we have. So you can see around like 370 right now is the downward channel. If we go with time, or as time kind of passes, this will go lower and lower because of the angle of the line. But you can see here the top of this, the resistance starts all the way back at the all-time high level. You can see the perfect pivot right here as a resistance, and we had a big sell-off off of here this third time that it touched. So the bottom end of it starts all the way back here, previously back in September of 2021, so I can't even believe that was a year ago. Crazy to think that. But it goes along these key pivots where we had big down days and big pickups off of it. And you can see here that it roughly is around like 370, 365 at the moment. And there's 2 variations of it, but the first one is the one I'm paying attention to right now. So this right here, everybody, is your pivot, 389 roughly on SPY, 389.50. So definitely mark this on your charts, because bias aside on what I think, this is your key pivot for if we're going to continue lower, or if we stay above here, if we would continue higher and at least retest this top edge of the downward channel in the future. So definitely mark this on your charts. Very, very key here. But also another thing I want to mention is last time we had kind of this size of a sell-off, or at least a very swift sell-off, was back here after the big March rally of 2022. And if you remember this rally, we kind of started to sell off just a bit over here, and then it started to get more aggressive, just like it got really aggressive back here after Jackson Hole meeting. You can see here on the hourly chart comparison, this stage right here, very, very aggressive selling. Over here, very, very aggressive selling again. And then right after that aggressive selling, it kind of sold a little bit further down, as you can see here, and there was some chop, but it based around this mid-range. So you can see here, this fits perfectly. I'll just draw an arrow, make it a bit easier to see here. But this right here, all of this in this range, is the mid-range of this downward channel. So you can see the top and the bottom here. This is smack in the middle of both the bottom and the top of the range, just like what's happening right here. You can see there's a lot of volatility. We had an upward move straight down off of that, so a lot of volatile action the last like 3 days, or at least 3 days of this week, and then a big upside move, very similar to how this played out. A lot of choppy price action where we fell down, back up, back down, up, and then we had a big upward move with, if you go to the daily candle here, which I'll also reference a lot, this daily candle ended very, very, very bullish. This was FOMC on May 4th of 2022, ended very bullish. And then there was a big gap down the following day on May 5th, which ended up being the deciding factor where we ended up falling down all the way to the lower end of the channel. So you need to watch for something like this to happen. If we have a very swift sell-off off of all this like choppy price action in the middle of this channel that we're in right now, kind of like how we are right here, if we had a big sell-off off of this, that is something you need to watch out for, because history doesn't have to repeat itself, but it can when you see similar outcomes. We saw a big rally here, even larger than March, but March was a rally. We saw a big rally in July, and then we had a swift sell-off, and you can see here we had a swift sell-off. So this is starting to be a very similar pattern to what we had earlier. And again, it doesn't have to happen. It doesn't have to have the same exact outcome as we had back here, but it's something to note. You need to be very careful of this because this candle right here in itself, if you traded a candle like this in any of the past 10 years, you would almost always see continuation off of a candle like this. This is a super, super bullish candle. And the fact we gapped down the next day and just fell a lot lower is pretty crazy to think. So you need to watch out for those kinds of traps over here, because stuff like this trap bulls like crazy, just because they get very bullish when you have just such a large candle that you can see here. This was 3.05% on this day, so you need to be very careful of stuff like that. Next thing I want to go over is the flow from last week, from September 5th to today on Sunday of September 11th. This flow is crazy, and I filtered it for over 1 million in premium. The fact, like, this flow in September is probably some of the craziest we've seen. Maybe we saw some stuff similar in May, kind of back when we were around this kind of like range over here. We had the big update and then a lot more downside. We saw a lot of puts coming in around May, and May was pretty volatile as well. This is probably like the first or second most amount of puts we've seen in terms of premium and how far out the money they are of all of this year. And there's no surprise, because seasonality says that September and October are very, very bearish months in the S&P 500 and just the markets in general. So scrolling through some of these, remember, it's filtered for over 1 million in premium. So every single one of these is over 1 million. You can see there's so many. Like the premium side right here, the premium tab is just insane. Like these two orders back to back, you're at 11 million plus alone. And these two prints right here, 11 million plus of 385 strike. That is very far out the money from where we are. Expiration is 10/21. That's literally like a month and a half from now. So that's also crazy to think of. And then all these that are highlighted here are above the ask. They really wanted to get into these orders. They didn't hit the ask, they went above the ask on these. And you see a ton of these highlighted ones just scrolling down through all of them, just crazy. 380s right here. And just like even just normal ones that you can see going down. We see 390, even closer to strike for 1118. This is still a crazy print. But yeah, just all of these, just pretty insane amount of puts. So definitely something to look at in itself. You need to be careful, because this is big money. This is not just like your typical retail trader that's buying puts because they think, oh, all these news articles are bad, I need to buy puts right now. This is big money, and they've been characteristically right all of this year. You can go back into, like, look at our historical flow chart. This is what I used to do, and this is like a 30-second tangent I'm going to make, but listen up to this. I used to look back in historical flow, and I used to back test how this type of flow on SPY and also individual tickers back in like 2020, 2021. I used to see how individual tickers and their flow corresponded to the price of a stock or individual ticker stock, and also for an ETF like SPY or an index SPX. And I used to see how it kind of like corresponded with the price afterwards. And you can do that using our historical flow tab. This is a very useful tool. I don't think enough people are using this. They just want to go to the options order flow and see, oh, there's a big SPY order, I need to follow that immediately with no regard to anything. We're never going to tell you to just use one order. I use order flow as like 10 to 15% of my thesis for what I think is going to happen for my bias. That's pretty small. It's still a very sizable amount, but a lot of what I use is like a lot of other stuff, like technical analysis is a huge one right there. And also I like to use dark pools as well. But you need to have your own setups and use this as a tool. It's not your sole reason to get into a trade. I cannot stress that enough. But yeah, this type of flow is just incredible to see. And if we consistently keep seeing this, and we're most likely going to see a consistent drop going forward, and it just is a matter of time of when that drop will happen. But you need to watch out for a lot of these puts. I am looking at SPY specifically. There are a lot of ones in like Apple and Google as well, which I do want to check out those charts really quick here for you guys. Basically Apple, this is the main kind of pattern where we're in the middle again. So again, this is not a surprise that we're seeing a support around here. You can see this got picked up 3 separate times around this 152 to 150 roughly 5 range. So this is a small range, but it's acted as a big demand, as you can see back here. So again, no surprise we saw a bounce off of this. And also, by the way, Apple is showing relative weakness. Look at Apple's daily chart and compare that to the S&P 500. Look at this huge bounce off S&P 500. Apple, very, very opposite of that. We only saw a 2-day pickup off of that. So this is showing relative weakness. Not a good sign for the S&P 500, because this is starting to see kind of like a rebalancing in terms of how Apple's performing right now. So you definitely watch how Apple's faring, because it's the biggest holding in the NASDAQ and also the S&P 500. So when this thing is weak, that's not good for people. And also September is the worst month for Apple historically. So again, yet another thing going against it right now. But yeah, you need to watch out for stuff like this. So on this alternate view for Apple, which I've shown you guys probably more than the other one, we have the support here of this channel and then the resistance to this channel. And right now we are below the support Yet again, we had a weekly close below this part of the support of the channel. That is not good for Apple. That is bearish. The bulls would want to see a gap up above this channel to start off next week. And also they want to hold it because it could still get rejected off of a gap up and fall lower down off of this. But definitely watch both of these charts I shared with you. Apple is the main leader of the market right now. You need to be careful when you see weakness like this in Apple, because that is going to correlate eventually to the S&P 500. And that is mainly what I like to trade, SPX and SPY. So that's what I like to share with you guys in the market, because it's helpful for every ticker that you can possibly trade, because all of them follow to an extent the general market, and you can also trade the S&P 500. So I appreciate you guys watching this video today. Best of luck trading this week, and I'll see you guys on Wednesday for another video.